Welcome to Money9. I am Rahul Oberoi. Budget 2021 is out and Indian equity markets have given a big thumbs up with Sensex reclaiming 50,000 mark and Nifty zooming towards record highs. But while the markets steer the union budget, helping us understand the macroeconomy impact, I am joined with Devendra Kumar Pant, Chief Economist, India Ratings. Mr. Pant, thank you very much for joining us for with Money9.
Thank you.
So, so according to you, what is the one big hit and one big miss emerging from the union budget?
Look, this is one budget after a gap of many years where the entire fiscal arithmetic, whether we look at the GDP growth assumption or whether we look at the tax assumptions, they looks more convincing. They looks more reasonable compared to in the past when we had seen that either the GDP growth assumption is way too high or your tax assumptions are way too optimistic. So that is the one major factor which you will see a major positive. You have asked for a major miss. Look, we should be mindful of the times at which this budget is presented. Uh, so if you see from a common man's point of view, what common man was must be must what step could have made a common man happy? Maybe some amount of income tax relief for the salaried class. But looking at the situation right now, if there was an income tax relief, then government would have taken that money from your pocket or from our pocket by some other measure. What we have seen is stability of taxation or tax rate. So yes, from a common man point of view, you and I, you being an anchor or journalist, I being an economist, will evaluate budget based on different parameters. But a normal person will evaluate whether he has got anything from the budget. So that way they will be a bit disappointed that there was no income tax relief. But as an economist, I don't see that as a negative point.
Okay. As you talk about common man, so do you think the good news is that there is no bad news on taxes?
Yeah, good news is like everybody was, most of the people were thinking like there'll be some kind of COVID tax, COVID cess, or some other way by which the taxation or the government revenues can be augmented. But what government has tried to do is rather than taxing people more, uh, they prefer to borrow, and by that they are trying to fund that budget. So yes, no new taxes. That's a big sigh of relief for most of the people.
Okay. So the government has pegged fiscal deficit at 6.8% for FY22 and 9.5% of GDP for FY21. This means the government has to borrow from the bond market. What does it mean for you and me?
Look, you started your program with the response of equity market on budget, and equity market has given big thumbs up to the budget. Again, like there are things, there are steps which are for the equity market. But when you look at it from the debt issuance point of view, or whether you look at it from debt market point of view, there's more money to be borrowed. No doubt, the amount of money, whether we look at the gross or net borrowing, that has lower than what it was last year. But last year, or sorry, this fiscal. So this fiscal, there is 12,78,000 crore. Gross net is is still higher. Next year, net is somewhere around 9,76,000 crore. That money is going to be paid or going to be generated or going to come out from the savings of the household sector. Now, if the savings of the household sectors are not increasing, then there will be a pressure on the interest rate. And once there is a pressure on the interest rate, we had already seen post budget announcement, the yield on 10-year government securities has increased somewhere around 15 to 20 basis point. Now, if that continues, then 10-year GSEC being the benchmark interest rate in the economy, all interest rate in the economy are likely to go up.
Okay. So, fiscal concerns highlighted in the budget, coupled with increased borrowing expectation, is seen weighing on Indian rupee. So, where is the rupee headed now?
Look, Rupee will respond to these development in the short run on day-to-day basis. It will respond to how the US dollar index, which is value of US dollar along with respect to some 18 odd major trading partner of the of US, how that is going to respond. But ultimately, end of the day, when you look at the overall value of the rupee, that will be decided by your capital inflows. So how much money or the foreign exchange is coming in the economy. Uh, Ideally, it respond to your productivity differential within of India vis-a-vis US and inflation differential between India and US. Now, productivity differential is how the relative growth of India is going to pan out vis-a-vis US, and how the inflation in India is going to pan out vis-a-vis US. Now, if you look at these two conditions, there will be some bias for the currency to appreciate. But when you look at the supply and demand of the dollar, what will be the current account? So this year we are having current account surplus. Next year, next fiscal likely to have a manageable current account deficit. Now, do we have the money or the capital inflows which are sufficient to fund that? Now, if they are sufficient to fund that, there will be less pressure. But if they and then one will look at whether it's a debt creating or non-debt creating capital inflow. So all in all, if you look at it is like next year or the next fiscal, there may be an orderly depreciation of somewhere around 2.5 to 3.5% between in that range over entire fiscal year. And as economists, we are not looking at day to day. We are talking about more average during the fiscal year. So FY22 or may see depreciation of around 3%, give and take 25 bips on each side.
Okay. And infrastructure and healthcare sector are the clear beneficiary of the budget. So, which are the indirect beneficiaries not making the headlines?
Look, indirect beneficiary will be, are when you look at the common man likely to be. Because if you read the budget and look at how the allocations have been made, the allocation for flagship Manrega has gone down from all time high number. If you look at some other food subsidy and other steps, the allocations have been lowered in FY22 BE compared to FY21 RE, and in some cases it is even lower than FY21 DE. So what does it suggest? Is It is expected that the first half will give you of next fiscal will give you a very high growth rate, and which will be a notional or optical because of the first half of this year is very bad is was very bad. So it is expected that the second half in this year will come to close to neutrality or close to zero. Then we will see somewhere a relatively better growth, which is somewhere closer to what we had seen in past few years. And when that situation will be achieved, you will see the demand for all these Manrega jobs and maybe food subsidy, which were taken more as a step for protecting the vulnerable section of the society. They will go down those requirements. So unsaid or undeclared beneficiary, I will see those if economy recovers and those who have lost their jobs, they get back job, or they are back into the entire production process. Whether they go back to the same sector, same employer, or with a different employer. So as long as these people get job, And once that happens, because look, toll and subsidy can't be a permanent solution. These things should be used at a time when the situation is adverse. So as things improve, you withdraw from it. So I think the beneficiary will be those people, those who are going to get some employment in the second half, or maybe say from the second quarter of next fiscal, when the economy will start showing a high positive growth. But that will be mainly because of low base or the negative growth in this fiscal.
Okay. And finally, sir, when do you see impact of these enhanced outlays making a difference to common man on the ground?
Look, there are different measures. There are some measures which is announced in the budget are more of a medium term. So all those agri infra and other things, which is some allocations are made for over a period of 5 year. Now, anything which is made a period of 5 year, it is unlikely that very first year when the program is announced and other things, there you may not see a very high expenditure on that. Uh, so yes, there are like continuation of past, say for example, high allocation to the road sector. So that is continuation of past few years. Every year government is having high allocation on the road sector, and you are seeing scenario on the like road quality improving. uh, the major thing which everybody will be looking at when people are started getting vaccination, uh, it is right, the initial stage should be for the frontline health worker, and government has done rightly the same thing. Whether the vaccine will be available in market, if the vaccine is available in market, then maybe those people who are at the upper strata of the population, other income of the population, may opt for getting vaccinated by purchasing vaccine from the market rather than waiting for their turn. Is it a strategy? Could be. Let make vaccine available in the market, and all those people who can afford it can buy that vaccine, and let government be focused on vaccinating only those people, those who can't afford it. And there is no harm in that, because if we can have 500 rupee pizza, or spend 1,000 rupee or 2,000 rupee in a movie, uh, we can spend 1,000 rupee on getting ourselves vaccinated. So is it only the non-taxpayers are going to get that, or is it a deliberate strategy, like make things available, vaccine available in the market, and then let's see all those people, those who get themselves vaccinated, and all those who are left, say 30, 40, or 50% of the population, government takes care of that. Because we are already hearing that many industrial organizations have all started are talking about procuring vaccines for their employees. So these are different ways by which you can have less pressure on the government finances, and you will see the first impact of this is when people will start, a sizable amount of people will start getting vaccination. Once that happens, that reminds me that famous movie Three Idiots, like all is well. So when that happens, that will make people to come out and start spending. Otherwise, what has happened right now, more than the pandemic, or more than the pandemic reduced slowdown, it is a slowdown because the people like you and me, whose jobs are not in danger, whose salaries are more or less protected, or we haven't seen a big amount of salary cut, we have also applied brake on our consumption because there is lot of uncertainty.
Okay. Okay. Okay, sir.
Yeah,
Let's close this discussion as at with all is well. I hope
all is well.
everything will be well. So thank you, Mr. Pant, for giving your time. Thank you very much.
Welcome.